Welcome to our channel to GVS Bank Academy. Now today I am going to discuss about monetary policy statement. Recent RBI monetary policy statement. It was declared on 8th to 10th. It was declared by RBI on 10th. Now presently we are commencing IOB special for 3 to 4, scale 3 to 4 and 4 to 5 promotional exams, and IDBI special for 3 to 4 examinations we are starting, and we are also starting for JAIIB and CAIIB June July examinations, so online classes. Now the monetary policy committee decided to continue with the accommodative stance. Means still from the last 6 to 8 monetary policies, the stance of the monetary policy is accommodative, means with low cost of funds, easy liquidity providing to the needy sectors, that is the accommodative with lower or lesser rate of interest, that is going on from the last 6 to 8 monetary policy. Same stance is going to be continued in this also. All the 6 members of the monetary policy committee, there are 6 members are there in the monetary policy committee RBI. Out of 6, 3 members from RBI, 3 members are nominated by Government of India. The ex officio chairman of the monetary policy committee is Reserve Bank Governor. All the 6 members of the monetary policy committee unanimously voted to keep the policy repo rate unchanged. So unanimously they have taken a stand that policy repo rate unchanged at 4%. The 4% repo rate is continuing from the almost 1 year. So presently also that. What is meant by repo? Policy repo. Whenever banks are required, they can borrow funds from RBI against SLR securities. This is called policy rate of RBI 4%. Reverse repo rate means when there was no change in the repo, reverse repo rate also there was no change, 3.35 reverse repo. Reverse repo rate means whenever banks are having excess liquidity, that amount they can park with the RBI. To that extent, RBI is going to transfer SLR securities to banks SD, subsidy general ledger account. That is called 3.35. Now, in addition to reverse repo, now RBI is also conducting variable reverse repo auctions also they are conducting. Now, the difference between repo and reverse repo is 65 basis point, means 0.65. The difference between repo and reverse repo is 0.65%. And marginal standing facility, borrowing from RBI during the evening hours and during the emergency or intraday liquidity problems are there, banks are allowed to borrow from RBI in the evening times. That rate of interest is 4.25% for overnight. This is for overnight borrowing rate. How much banks are allowed to borrow from RBI against the marginal standing facility? 2% of its bank's net demand and time liabilities, equivalent to 2% of NDTL from 1st January 2022 onward, that is 2%. 4.2. Bank rate is also 4.25 presently. The target consumer price index inflation target 4% within a band of plus or minus 2% with while supporting to growth. This is the forecast on inflation for this medium term target. This is the policy stance. Now, during the along with monetary policy statement, RBI was announced the statement on development and regulatory policies. Along with MPC, monetary policy statement, RBI also announced statement on developmental and regulatory policies. Point number one, extension of on-tap term liquidity facility of 50,000 crores to emergency health services. Now, already earlier they had announced up to 31st March. Now they had extended to 30th June 2022. On-tap term liquidity facility means whenever banks are required to finance under the emergency health services, they can make a request for funding to RBI under this window. That is called on-tap term liquidity facility. Maximum banks are allowed to tenor up to 3 years RBI. This is long-term repo. And rate of interest on the on-tap term liquidity facility is policy repo. Present policy repo is 4%, the same rate. Even up to tenors of 3 years, RBI is lending to banks. But from after borrowing, they have to invest in the emergency health services only. That is there. Number two, extension of on-tap liquidity window support 15,000 crores for contact intensive sectors. Contact intensive sectors yet policy repo rate and up to 3 years period available up to 30th June 22. If any bank want to lend in contact intensive service sectors, they can make a demand on-tap liquidity window from RBI. After borrowing from this window, the banks has to invest within 30 days from these intensive service sectors. That is there. What is the repo? Presently 4%. Tenor up to 3 years. These are two. Now, third point, voluntary retention route, VRR. Voluntary retention route, VRR, enhancement of limits for foreign portfolio investors. It is proposed to increase the investment limit under VRR. Earlier, the limit in government and corporate debt securities to FI foreign for 1 crore. Now they had increased it to earlier 1.5 crore, 1,50,000 crores. Now they had increased it by 1 lakh. It means 2,50,000 crores they can invest under voluntary retention route in Government of India securities and corporate debt securities by foreign portfolio investors. That is it. Now, review of credit default swaps guidelines. From it is a long pending is there. Now RBI had reviewed and given the credit default swaps guidelines already given on same day, that is 10th February 2022. They had already master directions on credit default swaps. It is a long pending issue. It was issued on this. What is meant by credit default swaps? Credit default swap is nothing but credit derivative. Credit derivative. Objective of credit default swaps or object of credit derivatives is to mitigate credit risk in advances or in investments. Now, banks are allowed as buyers in the credit default swaps with a view to mitigate their credit risk, default risk, credit spread risk in either in advances or in investments made by banks. Very, very important credit default swaps. Then, fifth point, permitting banks, Indian banks are permitted to deal in offshore traded outside foreign currency derivatives, which are settled in rupee derivatives. Now, Indian banks are allowed to deal with offshore foreign currency derivatives. On the maturity day, they are going to settle with rupees. Earlier, this is not there. This facility was allowed to banks to deal in offshore foreign currencies. Enhancement of the cap. Enhancement of the limit under e-rupee. E-rupee. E-R-U-P-A. Prepaid digital vouchers using UPI. Prepaid digital voucher using UPI limit from 10,000 to increase it to 1 lakh. Earlier the limit is 10,000. Now they had increased it to 1 lakh for voucher, and allow use of this e-voucher multiple times. Earlier they had to use in one time. Now they can use in multiple times till the exhaust, till full utilization of 1 lakh limit. So multiple times you can use, and the limit was enhanced from 10,000 to 1 lakh. Enabling better infrastructure for MSME receivables financing. For enabling better infrastructure for MSME receivables financing, increasing NACH, National Automated Clearing House mandate, NACH mandate limit for 1 crore to 3 crores for TREDS settlements. Whatever the settlements transactions are executed in TREDS, trade receivables discounting system exchanges are there. In that exchanges, the settlement system, earlier maximum cap is 1 crore. Now they had increased it to 3 crores. That too under NACH, National Automated Clearing House mandate. That increase. It is a very good step by RBI to increase the limit. Means they can go discounting up to 3 crores also for transactions. So TREDS. This is the settlement on developmental and regulatory policies announced along with monetary policy statement on 10th February 2022. Thank you very much viewers for extending support our YouTube channel. Regularly we are updating and we are continuously conducting our online classes for JAIIB, CAIIB, promotional exams, all banks, all scales we are conducting. Thank you very much viewers.